Ready for a juicy financial update?
In this video, we are going to be giving you all an insider's look into the last 3 quarters of our net worth updates. I know it's been a while since we've been able to share one of these, so we're going to kind of consolidate these 3 quarters into one video, let you know what's been going on in our financial situations. And by the end, you'll gain some insights as to how to build your own wealth based on the information that we are sharing in this video.
Hey wealth builders, my name is Mishak.
And I'm Akiva. I'm a certified financial planner and money coach for young adults in their 20s and 30s. Our quarterly net worth updates have become a fan favorite for sure, and we're excited to share this video with you today.
Alright, so we're going to be starting with March of 2023, and if you're new here, I apologize in advance. I will be looking down periodically just to make sure that I'm quoting the correct numbers, but again, this should be a really special one because we're doing 3 quarters in one, so it'll be a little bit longer than normal also. So get your popcorn, sit back, and let's get started. So we're going to start with our assets as we normally do, and we saw a 12% change, which the equivalent is $11,938. And we know that that is a lot of cash, as we normally do. You guys are always saying, why are you guys holding on to a lot of cash? In a previous video, you learned that Akiva is pregnant. That was a big reason why. And we got this comment a lot in previous videos. So since the last time, most of our cash had been business revenue, about $4,000 to $4,500. $4,000 for business revenue, and then $4,500 put aside for student loans. And then almost $1,000 in our tax refund is what explains that, increase in revenue there, or increase in cash. So for receivables from December 2022 to March 2023, there was nothing there, nothing that we were expecting to receive from outside sources, so that's why that number was 0. But at the end of March 2023, we were expecting $2,047, and this was money that Akiva's job owed her, as well as a net tax refund. So that number was $2,047.
Yeah, we're the type of people that file our taxes super early. So usually first quarter of the year, we are, waiting on a tax refund or have recently received a tax refund. And so at that point in the year, we were still waiting on one of our tax refunds to come in.
Next, we're going to go down to liquid investments and retirement plans. And it's always really exciting to see what this line does. All right, so we saw a 16% change, positive change, and that equated to $14,308. So pretty nice, at least for that quarter. We'll see about the others. And the new achievement was we hit 6 figures in investments. Akiva reached annual 401k match from her previous employer. Received her annual 401k match. And as you've probably heard in previous videos, Akiva's employer, they do like a look back. So while she left at the end of November 2022, her employer at that time, or maybe in February, I'm not sure, looked back and then gave her everything from January until her final day. That's how they do it. Whereas with my employer, it's every time I get paid, the funds go in. So that's why maybe a little bit of a bump in that quarter, which is pretty normal for us.
But the markets also did really well. So although my employer match was probably a few thousand, but definitely not 14. So the markets definitely did really well in the first quarter of the year. So as I mentioned, that's a new exciting milestone to have achieved in that quarter, which was over now 6 figures worth of investments. So $104,000 and some change. That's super exciting.
And next we're gonna go down to our home. So our home has remained the same quarter over quarter, no change there. We've been holding that line item at the purchase price, although we do believe that if we were to sell today, that we could get a little bit more money for the property. We've just chosen to keep it really flat. So that would be, like I said, 0% change. Next, we're going to go down to the personal property section, and under that we have our cars. So this quarter we actually saw a decrease. Yeah, we only have one vehicle, which again, if you've been paying attention, I think, it's been a while since we got rid of the other car, and we only have one. and we saw a 3% decrease. So that equated to $280. And we really rely on Carfax to tell us what the fair market value is as of the final day of the month to see what the vehicle is worth. And if you've been following us, you know that the car ebbs and flows. Sometimes it's like a point whatever increase where it's like a positive $11 more than what it is. Sometimes it's positive 100, sometimes it's negative 280. So it fluctuates. So we don't really pay too much attention to that line item, but we do track it. So that brings us down to our total assets, receiving a 6% change, positive change, and that 6% equates to $28,013 of an increase. So that is pretty good, at least from the assets section. Yes. So let's see how our liabilities are doing.
Yes, and so just to make sure we're giving you the full numbers, so our total assets now stand at $468,348. So continuing to see that increase there. But like Michelle said, let's go down to the liabilities where we start subtracting. That sounds like a nice, big number. Mm-hmm. Let's quickly start detracting and subtracting things from that to see where we land. So our largest liability is our mortgage at this point, and that has continued to stay a steady state. You kind of keep seeing this literal 1% change, 1% decrease in the principal balance of our mortgage every quarter. And so that in dollars translated to just under $1,300 for this quarter. So that is biggest liability, $219,364 balance right now. Then this quarter, we also had some payables, things that we owed. Individuals, entities, whatever, because we want to make sure that if we're accounting for money people owe us on the asset side, we're accounting for the stuff we owe people on the liability side. So this quarter, I happen to have a medical bill that was outstanding, so make sure to factor that in, as well as some expenses. I guess my tithe, I was a little bit late on returning that this quarter, and it just fell outside like a few days later of when I actually returned it. So I count that as a liability because I'm like, yes, I do owe the Lord some money at this moment. So I wanted to make sure I counted that into, because that would have ordinarily have been paid before the month was over. Mm-hmm. So that's that. Then we had credit cards. This again, we do not carry credit card debt. We do not carry credit card balances. We pay off our credit cards in full on time every single month, but we want to make sure that we've accounted for whatever was swiped, that we owe as of that day. So on this particular day, we happen to owe a lot more on our credit cards. We were up to $3,250 owed. So that's a large increase over the past quarter. It was a large spend month. Several expenses on these cards are actually included back up in that, money owed number, meaning the money to be reimbursed. So that settles out there. And then lastly, our student loans, there was no change from December to March. That was still holding at $71,825 because we had not made any student loan payments for that quarter. So all in all, our liabilities total $295,730. So our liabilities went up a little bit this quarter. We owe more this quarter than we did last, but that's okay. Like I said, it's a lot of ebb and flow with certain things like credit cards and whatever else. And so that was a change of $2,341. But all in all, our net worth still increased, right? With all the ebbs and flows, where did we stand at the end of March? Our total net worth came to $172,618. So that was a positive change of $25,672, or an increase of 17%, which is huge. And we see the main drivers of that really being our increases in cash and our investments. Really is what drove the majority of that change for that quarter, which is super awesome and exciting to see. So let's see how that translates to June. What happened between March and June? Let's get into it. Now, if you enjoyed watching this video, you are definitely going to love our webinar that we designed just for you all. It is called Wealth Unlocked: From Stumbling to Soaring in Your 20s and 30s Without a Six-Figure Salary. Long title, I know, but that's exactly what we've done, right? Mm-hmm. We just showed you the proof of our labor, so you get to see even more information about our story and how you can implement some of the tenets that we've learned in our journey into your financial life. I'm going to be debunking 3 common myths that you might be practicing right now in your money life, and what to do instead, and how to build wealth and ultimately move yourself as a young professional into financial freedom. No 6-figure income required. Okay, so link for that will be in the description box, linked in the first comment, all the places. Be sure to check it out. And when you watch it, you'll also receive an exclusive invite into our group money coaching program if you're interested in working with us further. So that's what we got for you.
All right, so let's start with cash again. So we're going to go to cash reserves. So we had a 4% change, positive change increase, and that equated to $3,991. No explanation on the explanation line. I think
consistent our cash has ever been in any quarter. Like $4,000 of an increase really isn't that much for us, considering how much cash you guys have seen us kind of squirreling away over the past couple of years. So relatively.
And I'm trying to think why it didn't increase more. But
we weren't actively saving at that point. We finished saving for a lot of our major goals, right? So like the baby fund was already funded, like we talked about in our in a video a little while ago, and all these major goals. So we're not really actively saving toward anything, I think, is what in this season, and so I think that's really why. And with the business, me being sick, like things really kind of slowed to a halt in this quarter, I would say, as well. And so there really wasn't a lot going on, really, when you think about it. There really wasn't a ton going on this quarter for us personally.
Then going down to receivables. And this time we're seeing negative numbers, and that's because no one owed us anything at the end of this quarter. So 100% negative, which equated to the same number, which was $2,047 last quarter that we were expecting. We just deducted that out. So no, nothing really major there. Then we go down to liquid investments and retirement plans, and we saw a 12% increase, which equates to $12,053, and again, six figure in retirement assets alone,
which is different because last time we hit six figures in investments. Part of our investment line item included non-retirement assets. I think we have about $10,000 or so that's not in like a retirement account. But this quarter, it's like we have six figures just in our retirement accounts too. So kind of a little baby milestone on top of the milestone from last quarter. And the markets, of course, did well, which is why it increased so much.
Then next, we're going to go down to our home. And again, we keep that flat. It's the same amount quarter over quarter, so no changes there. And then we're going to go down to the personal property section. And again, we have the cars. And we saw a 2% decrease there as well, which equated to $150. And again, we get that number from Carfax. They tell us what the value of the vehicle is at the final day of the quarter. So we saw a 3% increase in cash overall, which equated to $13,847. So we ended off June Q2 of 2023 with $482,195. But let's see how our liabilities are doing.
All right, our liabilities. Not a lot going on here, right? Our mortgage, you see that 1% again, just over $1,300. And you'll see with each quarter, that amount actually ticks up a little bit and a little bit. If you know how mortgage amortization goes, the further you are, the more you're actually tackling principal versus your money just going to interest. So I think last quarter it was like $1,297, and then this quarter it's $1,307, so like $10 more in principal than the last quarter. So you're gonna just continue to keep seeing that, and eventually that 1% will turn to 2 and 3 as the years go by and as we get deeper into that process.
And in case you're wondering why, okay, some of you might be, why are we not paying a little bit more money down on the mortgage? It's because we have such a low interest rate that we haven't really determined that it makes sense to really try and tackle that debt. We're much more focused on our higher interest debt, like student loans and those type of things. Yeah. And trying to focus on like, okay, we have the baby coming. Does it make sense to put more money in a different area? So we're fine with just trucking along with paying exactly what we're supposed to pay each month.
Yes. And then in terms of our payables, that went from $1,292 down to $808. So this medical bill that I talked about last quarter, it's still around. It's technically still around even as at the time of shooting this video. I kind of was fighting with my insurance company back and forth. So that's why there's still a little bit of money owed there related to the medical bill. So I'm just going to keep that until it's resolved. But for now, that's how much was still owed on it. Then credit cards, we spent a little bit less this quarter than we usually do. So that, inconsequential, $1,132 less just happened to be the balance as of June 30th. And lastly, student loans. Again, we made no payments in second quarter of 2023, so that balance remains the same at $71,825. So our total liabilities now amount to $292,808. So that is a small positive change there, bringing our total net worth to $189,387, which is a change of 10%, just over $16,000. And again, that is primarily fueled this quarter by investment growth again. So we see the tremendous benefit that is not ignoring investing, right, in your financial picture, because we've seen for the past 2 quarters how much this has contributed to our net worth growth. Yes, it's important to pay down debt. Yes, it's important to manage all the other things, but it's also important to keep that in mind so that you can continue building wealth, especially for the long term.
And when we say investments, we are primarily investing through our retirement accounts, through our employers. We are really, well, Akiva actually might have opened a few other like side accounts, but basically do the same thing, just managed by herself. But they're retirement vehicles. We're not, day trading, and we're not doing any of those tactics.
I have zero interest.
We are just doing the vanilla that most people who have employers with retirement options are doing. The only tweaks that Akiva might make is like, oh, well, let's do this or let's do that. You don't need a target date or you don't need a that. Like, she handles that stuff in the retirement account, but it's really nothing crazy, I would say. So
yeah,
again, not anything like far-fetched where you have to go like educate yourself on how do I do all of this stuff. No, very simple, and that's the approach that we've had, and so far we've been seeing a pretty good return. So now we're going to take a look at the end of Q3 of 2023. So I'm really excited for this one because it's more current. The other ones were like, a few months ago, and I don't look at any of these numbers. Akiva prepares everything, so I am getting this in real time just like you are.
He doesn't even review before we hit record, okay? So when he's telling y'all this, he's looking at it for the first time himself, okay?
So now let's go to our assets. So for cash receivables, this was a real big change.
For what now?
Cash reserves. I'm sorry. Cash reserves. This was a really big change. I'm just looking at the big red number. So we saw a 14% decrease, which equated to $16,606. And this was because we made a $26,000 student loan payment in that quarter. So that hit our cash really, really hard. Then we go down to receivables. This time it was completely zero. We weren't expecting anything from any outside entities or individuals. Then we go down to liquid investments and retirement plans. So in this quarter, we're actually seeing a decrease of 1%, which equates to about $678. And, the explanation for that is the markets just didn't do as well that quarter. Plus, we paid over $2,000 in medical expenses from our health savings account. So that's what happened in that quarter.
Yeah, remember all the medical expenses we talked about in the video where we talked about the pregnancy journey and everything like that? So while those expenses happened, like the doctor's visits had happened, they take quite a while to actually bill us. And so by the time we actually got the bill, it was already third quarter of the year. And we used our HSA money, which we consider part of our investments, right? Because you can invest the money in your HSA, do all these things with it. So we have that in that category, not just cash. And so we used our health savings account to pay the medical bills that we received in that quarter.
And just for the folks out there who might have heard that HSA terminology for the first time, you probably have heard, again, at your most employers, like an FSA. That's different than an HSA. The HSA is the one that you can do some investing with. The FSA you cannot. Just, so you're clear on that.
One of the major differences, but we can have that conversation another day.
The next line item is our home, and again, no change there. It stays at the purchase price. So, nothing there, no change. And then we're going to go down to personal property, and under that is our car. And that also saw a negative change of 4%, which equated to about $310, and we get that figure from Carfax as of the last day of the quarter. So this quarter was actually pretty bad for our assets, I would say. So we saw overall a negative 4% decrease in our assets. which was about $17,594, which ended us at the end of Q3 2023 with $464,601.
Yes, so let's go down to the liabilities now and see where that changed. And of course, that looks terrible, right? Your assets went down so much, but really it's just because we paid off a lot of debt. So let's go down to liabilities and see where that actually netted us, for our net worth. So our mortgage, again, we were $1,297, then $1,307. This quarter we're at $1,316, right? We're making a little bit more of a dent, a few more dollars, but that same 1%, same old. Payables this quarter, that medical bill was still hanging around, so now that balance is down to $374, because I've been paying small amounts on it while I'm battling it out, but yeah, that's a whole nother story for a whole nother day. But $374 is what is still owed on that medical bill, so that's still there. Credit cards, we spent less than we did the previous quarter, again, on credit cards as of that date. So we owed $1,150 on credit cards that day. And then our student loans, which is, like we said, where we made the biggest dent this quarter. As you all know, we went back into repayment. Interest started accruing on student loans as of September the 1st. So in late August, we made a huge payment with all the cash that we had available to put towards student loans at that moment. And so that was $26,681 was the total amount of the payments that we made on our student loans. So now our combined student loan balance, could y'all believe it? $45,145. That seems like nothing to me now. Like $45,000 compared to where we started. Y'all know where we started this journey.
That's still a lot for me.
It's still a lot, but where did we start? How much did we have when we started?
At like 180.
160. It was just over 106. I think it was like 164, like 164,000, somewhere in that range. And so to be down now over $100,000 down to $45,145. Like, it feels good. It feels good to really see that number. Like, it doesn't seem like, in comparison, those two numbers just cannot be compared. You know what I'm saying? And so just stick to the journey, y'all. Like, over time, you're gonna get there. We're getting there. I see the light now. I see the light at the end of the tunnel. So we're gonna kill that 45,000, not as heavily as we were before with all of our debt payoff stuff, but we will get through it, right? We're seeing the light at the end of the tunnel. Only maybe a couple more years, and we'll be done with this. So that is really exciting to see that huge drop. So all in all, our liabilities went down by almost $30,000 this quarter to $263,409, putting our total net worth to $201,192, y'all. Major milestone alert. First time our net worth has hit $200,000.
Wow.
Crazy. I was looking back, and we'll put the charts up. As you know, we normally do the little line graph to show you the progress. And yeah, it's crazy to think that we were at a negative net worth only a couple short years ago, right? I think March of 2021, we were still negative. And now 2.5 years later, basically, we're over $200,000. Like, wild. And so that just goes to show the fruits of your labor. When you're looking at stuff in the moment on a day-to-day, a month-to-month basis, it's kind of hard to see how far you've come. But that's really why we do these net worth updates, right? It's for you all to see, for transparency, but also for ourselves to really track our journey and see the fruits of what we're doing. See if the stuff that we're teaching y'all, the stuff that we are trying to implement in our own lives, is actually working. And this is the proof, right? The proof is in the pudding. This is the pudding, I guess I should say. This is the pudding, right? Are we building wealth? That's what we aim to do. And the answer so far has been yes, with all the strategies that we've been implementing and that we aim to teach to you all as well. And so we are super excited about the progress that has been made over the past 3 quarters. And we're excited to see what happens next. Now, I won't get too excited because 2024 is going to be a whole different playing field than 2023. We're going to have a lot less income. Like, I fully expect our net worth probably will go up again in the last quarter of the year, and then we'll take a very quick decline over the first couple of quarters of 2024. That's just my guesstimation, just knowing what's coming down the pike with taking parental leave, not having as much money coming in, like using our actual savings that we've saved up for said baby. Like, that's going to go back down really fast. So it's possible we might drop below 200,000 very quickly, but in the meanwhile, we're gonna celebrate this little mini milestone while we have it, okay? While we're here, we're gonna celebrate, and then we'll roll with the punches and see what comes next. That's just part of life and part of dealing with money.
So we would love, love, love to hear about your financial journey. Share your wins, your loses, your questions, everything down below. And let's encourage each other as we all go on this financial wealth building journey. Thanks for watching our very special net worth update where we combined 3 quarters into one video. We appreciate you for watching and we'll see you in the next one. Bye.